When will China finally stimulate its economy? Today we've got a statement by the former People's Bank of China official Sheng, who said the last wave of this epidemic is more severe than the COVID outbreak in 2020 in Wuhan, and there's a need for greater efforts to achieve the GDP forecast of 5.5% for 2022. Now, if we think about stimulating the economy, we're usually talking about something that we've seen in the past with rate cuts. So in the United States, with the start of the epidemic, we've seen that the rate's been cut to almost zero. And now we have this ongoing talk about rate hikes, right? So because this very loose monetary policy has obviously led also to inflation, currently this is also a major factor for the markets. We are talking about rate increases. Now, if you look at this chart, you see also Japan and the Eurozone and the UK and the United States, basically all of these economies near zero interest rates, while China actually has interest rates that are close to 4%. And so while the Western economies are facing the challenge of actually raising the rates, it seems that China would have a very big leeway of lowering rates in order to stimulate the economy and with that bringing liquidity to the market and the real economy. While we have more calls for increased stimulus, China has actually been already active. So yesterday I made a post in the Patreon community. And by the way, you can become a member of this community by joining our Patreon and the $10 tier. And then you get regular news like this of an overview of the China stimulus. And so far the measures have included suspending mandatory social security payments for enterprises in industries like the catering, retail, tourism and civil aviation industries, because they have been hit very hard. China has been expanding unemployment insurance benefits, increasing financial support for companies who retain employees. They have been increasing the percentage of unemployment for insurance funds that local governments can use for vocational skill training. And we also have some news about lending and easing of financing, but that was mostly towards the real economy and the manufacturing sector. So this is really stressed a lot by China. And most of these are in the area of agriculture, small businesses, a little bit in the area of science and technology innovation and elderly care services. And so the only ticket that came to my mind that I was recommending to my patrons here was the Chinese travel platform Trip.com, which is obviously hit hard by China's COVID lockdowns and travel restrictions, but they may actually benefit from those social security payments suspensions. So I would say those measures announced by Li Keqiang that are posted here in the Patreon community so far haven't really pleased investors. In fact, maybe even yesterday's sell-off has been partly due to the fact that investors have actually anticipated a rate cut, and well, this may only come maybe even next week or even more prolonged out. And so maybe it seems that China, despite those calls for stimulus, seems to be currently more conservative, I would say, and could even surprise investors that only, and that is my best guess here, by the fall, when there is this important political meeting for a consecutive term of Xi Jinping. Before that, maybe going out of those lockdowns in Shanghai, they will start stimulating the economy in order to have a nice and sound economy by fall and when this important meeting is happening. And so, yeah, it may take a little bit longer. It may not be the full force stimulus that most investors are currently looking at that could give China tech and Chinese equities in general a big driving factor and a kind of good stimulus pump, similarly to what we've seen in the US with 2020. So let's see how this all develops. We have to watch the COVID lockdowns, and then we'll see like how aggressively the Chinese policymakers will actually tap into those stimulus funds that certainly they have available if we're just looking at where the rate situation is on an international comparison standard. And then I think that could be a catalyst for Chinese stocks in general. With that, please leave a like for the algorithm. Please make sure to subscribe, hit the notification button that you don't miss out on any of my frequent videos, and then see you in the next one.